So this is something a bit, I'm making this video for friends. Get that out of the way. Making this video for friends. It's like a Forex theory kind of video, Forex psychology, but it's more so, I'm a behaviorist through and through. I've done my psychology masters. I get that. But when it comes down to things you do daily in conditions or roles like trading in Forex, there are behavioral contingencies and behavioral mechanisms in play. If you're not aware of them and you only go by mindset change to try and adapt your behavior, for a mindset to control your whole behavior, that mindset needs to be so disciplined. And sometimes people don't actually realize when they're doing something wrong. But anyway, I made together this documents called the behavioral trading framework. This can be used with any strategy. So swing highs, swing traders, day traders, scalpers, no matter who you are, this concept can be applied to anybody. And put it this way, I won't read it all out in entirety, but I'll read some sections out. Most people enter training believing in success comes from discovering the perfect strategy, indicator, or market or prediction system. However, research across psychology, neuroscience, and behavioral economics and performance science consistently suggests that long-term trading performance depends far less on prediction and far more on behavioral consistency under uncertainty. Let's pause there. Our minds are wired for certainty. That's how we make sense of the world. That's how we go on each day. And that's how we get this sense of security, because there's a lot of certainty. Okay. Back when there was dinosaurs and shit, that's how we survived. There was areas where we're certain that there's no fucking dinosaurs. We can live there, thrive there, grow our children there. And there's areas that we're not sure about. And then, like, let's say you hear a noise or someone gets killed that you see, boom, your brain's telling you, fight or flight is telling you, do not go there. That same system applies to today, especially in regards to trading. Trading's very uncertain. There's not a guarantee you're going to make your P's. I think a lot of you traders out there will understand that too. There's no guarantee you're going to make your P's, all right? So the behavioral trading framework is developed to try and address, I don't want to say a major gap. There's good psychology stuff out there, but I think there's not enough people talking about behavior explicitly for what it is. They're talking about your psychology, how your greed, your FOMO, your over trading. FOMO and greed, yeah, I say psychology. Over trading, that's a behavior. That's you pressing buttons. Any observable action is a behavior. So you pressing buttons and overdoing it, and I can see a record of your over trading, you're over leveraging, that's a behavior too. Okay, why do you do it? What conditions make you want to do that? Losing streaks, whatnot. Okay, so I created this framework using applied behavior analysis, which is one of the main sciences for working on individuals' behaviors. Okay, one of the main. I know it's got a bad rap with autism and whatnot, but within ABA there's a lot of skill development. There's a lot of understanding what systems affect behaviors, and then using that to either make someone's quality of life better and to increase the skills that they need to learn, and to reduce the situations that make them stressed out and to cause them to do behaviors that impact their quality of life. So in trading, I want to understand what contingencies and what skills are required for an individual to have a better trading performance, and what conditions are in place that make an individual have a weaker trading performance, okay, and to overtrade and to over leverage and to lose, for example. Okay, so I'm going to use all my knowledge and all the areas of science, because as a professional, my trade is I'm a BCB, I'm a board certified behavior analyst, and I'm a UK certified behavior analyst. So that's like the highest certification you can get when you're a behavior analyst working with people. Very difficult exams, 2 years of monthly supervisions, weekly data, all weekly supervisions, 2 years of weekly supervision, and it's not cheap. And then after that, you got to do this super strenuous exam that only 50% of people pass the first time. I managed to pass the first time, and thank God, since then I haven't looked back. So I'm drawing on all my knowledge and experience from that, but also my love of trading. I started trading in 2016. I had live accounts, demo accounts, and I've blew them. And I've blew them so many times that to the point where it was like, I don't want to trade anymore. I think it's stupid. And then I got back into it this year because of a friend of mine was doing quite well in stocks. And I thought, let me go see if I can do a bit of trading again. But this time I'm going to try and figure out what I need to figure out, whilst also applying what I now know about human behavior and psychology, see if it can help me be a better trader. And it actually has improved. Like, for example, I started with a small account, £100 or so. Within the week, I made like 20 quid of daily, £20 of consistent daily practice. Also, I now know where there's areas where it's not worth trading. I know there's areas where it's not viable, and I've also found areas where it's more viable per session. And that's trained my brain and body to go, right, what they call it, diamond hands. Sit on your fucking hands until the price moves near those areas. Don't get excited. Don't think like you need to trade because you haven't traded today. Sometimes your best capital preservation strategy is to not fucking trade. I can't stress that more than enough, okay? Anyway, at its core, trading it's not just a technical activity. It's a high-pressure behavioral performance task. There's uncertainty. There's risk exposure. There's delayed gratification. There's emotional regulation you need to have. Probabilistic reasoning. Because you've got to remember, it's a game of probabilities. It's like being on the slot machine, you know? It's not a guarantee you're going to win each time. Okay, even if you've got a perfect strategy, and training your mind to understand that and take that on board while still continuing forward. Every day you approach the market could take your money. So every day you approach the market, the main rule is preserve your capital every day. And that might also mean not trading if it doesn't look like a good opportunity, or waiting for a price to land somewhere where it's a good opportunity. Okay, reinforcement learning, because yes, good habits, bad habits get entrenched once they're reinforced. Reinforcement is when, let's say, you win a trade, or you over leverage and win a trade, or you over trade and won the trade. That will then train your brain to do the bad habits longer. Okay, so you have to then train your brain to do the right things. Even if you take a small loss and put a good stop loss and you lose that trade and you walk away that day, that's a fucking win in terms of behavioral trading. You better go out there and treat yourself if you have a day like that, where you took a small loss, you closed the platform and said, I'm not going to trade for the rest of the day now, I'm going to wait till tomorrow and make that money back. Absolutely, that's the best thing you can do. But your psychology won't let you do that. Your brain won't tell you you've taken a loss, walk away, come back tomorrow. That only comes through you enforcing that discipline and trying to stick to your rules, and when you do, rewarding yourself for sticking to your rules and getting into the mindset that's the right thing to do. Okay, cognitive flexibility, of course, you've got to be able to think under pressure and adapt, and impulse control. Okay, there's a lot of things here. So this is the first video, because I think this is like a 30-page document. I feel like I can't do a whole screen record of just the behavioral trading strategy, but I want to get you guys thinking about some of this first. Let's try to wrap up at a good point. Financial markets provide one of the clearest naturally occurring examples of a variable ratio reinforcement system, which is found in human behavior. Wins and losses occur intermittently. Outcomes are uncertain, and emotional reinforcement can shape behavior rapidly. This means traders are often psychologically conditioned by the market itself, sometimes reinforcing highly maladaptive behaviors such as overtrading, revenge trading, impulse risk-taking, emotional decision-making, and compulsive market engagement. From a behavioral perspective, many unsuccessful traders are not failing because of lack of intelligence or technical knowledge. Instead, they struggle because the market amplifies existing psychological vulnerabilities under conditions of uncertainty, stress, and intermittent reinforcement. Intermittent reinforcement, every now and then you get what you want, but you do the same type of behavior. So when you overtrade all the time, obviously sometimes you're going to get a win, and then that trains your brain that, shit, when I've started to be on a winning streak or on a losing streak, if I amplify the trading and do more trades today, there's a chance I might get it. Okay, and that trains your brain to look for any opportunity it can, and then when you find a potential opportunity and take it, your brain's like, good, under choppy conditions, there's a chance you can make your money back. That's not, no, that's crazy. All right, and this is where for me the trading changed. Okay, when I started to understand how behavior and psychology work together. It's not just trading psychology, guys, because it makes you think that all it is a mindset thing. Yeah, it's a mindset thing, but then it's a rules-based thing. It's a understanding your inabilities under these market conditions, understanding the market conditions and how they affect your behavior, understanding when you lose, how it affects your behavior, and understanding what to do when you lose and how to lose. And you know what? I forgot the name of the guy, but I remember hearing there was like a famous quote from this. Okay, famous quote. I can't remember it. But put it this way: there was a guy who wanted to get really good at airplane safety, and his job was to design cockpits and whatever for pilot safety. And for him to be really good at his job, he studied the ways that pilots crash. He wanted to be the best. He wanted to find the best ways to kill pilots. So that way he can know what not to do to increase pilot safety. You have to do the same with trading. Find the best ways to fucking drain your account and then avoid those. Okay? And then not just generic ways like over trading, over leveraging. Take data on yourself. When you make your trades, trading journaling is so important. What were the trade look like? How was I feeling inside? And what was the chart looking like? What happened earlier that day? Did I sleep well? Did I get up early? Was I in a distraction-free environment? What was I hoping to make more money that week? What was going on before the trade? Document that down every time. Then, how did you trade? Was it a sell? Was it a long? Was it a scalp? Was it a swing? Where was the TP? Where's the stop loss? Did you even have any of those? And then what was the outcome of that? Okay. And then once you get that, if you record that honestly and accurately and objectively with yourself for like a whole month, over 100 trades, you'll start to see the ways that you lose really, really well. And one way that I lost really well was I would overtrade and revenge trade. The second I took a loss, I'm making that money back and I'm sitting there and I'm going to, any slight impulse from that gold candle that looks like it's going to make a big move, I'm in. But gold's so volatile, it'll go and then it'll snap right. The second you place that order, that buy or sell order, I feel like it knows and it just reverses back straight away to let you know, haha, you fool. So this is what I mean by figure out the best way that you lose and figure out how easy it is for you to lose in the conditions that make you lose regularly. Okay. Maybe do that with a demo account rather than a live account and then journal that. And then you'll be able to identify, okay, under these conditions, I trade the worst. When I'm feeling like making lots of money, I trade the worst. Or when I do more than one trade, 2 trades a day, I end up losing money. Simple. Do 1 trade a day. Simple. Minimize risk. Like simple stuff. Okay, I'm going to stop now. This is actually the first video. I'll try and do more of these. I've got a big ass document. Sorry, my group chat's popping up. Got a big ass document where I've tried to jot down everything that I've understood, what I've been trying to do. This is completely free. I'm not trying to sell a course. I think there's a lot of that hocus pocus bogus. That's what I wanted to say. Hocus pocus bogus out there. I can make you a millionaire, or follow my trading group. And I know there's a lot of scammers out there that do this thing where they show big wins and they use demo accounts. I just feel like, come on, guys. Like, you are really trying to sell the dream just so you can get more money yourself, right? What happened to helping people have a bit more money in their pocket each week so they can pay for their dinners? Especially in this economy. If we figured out a way to do that, let's help people do that. All right, I'm the Behavioural Trader. Thanks again for listening. See you later.